Meaning of accounting. In 1941, the American Institute of Certified Public Accountants, AICPA, had defined accounting as the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions and events which are, in part at least, of financial character, and interpreting the results thereof. With greater economic development resulting in changing role of accounting, its scope became broader. In 1966, the American Accounting Association, AA, defined accounting as the process of identifying, measuring and communicating economic information to permit informed judgments and decisions by users of information. Accounting can therefore be defined as the process of identifying, measuring, recording and communicating the required information relating to the economic events of an organization to the interested users of such information. In order to appreciate the exact nature of accounting, we must understand the following relevant aspects of the definition. Times economic events. Times identification, measurement, recording and communication. Times organization. Times interested users of information. Economic events. Business organizations involves economic events. An economic event is known as a happening of consequence to a business organization which consists of transactions and which are measurable in monetary terms. For example, purchase of machinery. Identification. Identification, it means determining what transactions to record, i.e., to identity events which are to be recorded. It involves observing activities and selecting those events that are of considered financial character and relate to the organization. The business transactions and other economic events, therefore, are evaluated for deciding whether it has to be recorded in books of account. Measurement. It means quantification, including estimates, of business transactions into financial terms by using monetary unit, viz. Rupees and paise as a measuring unit. If an event cannot be quantified in monetary terms, it is not considered for recording in financial accounts. That is why important items like the appointment of a new managing director, signing of contracts or changes in personnel are not shown in the books of accounts. Recording. Once the economic events are identified and measured in financial terms, these are recorded in books of account in monetary terms and in a chronological order. Recording is done in a manner that the necessary financial information is summarized as per well-established practice and is made available as and when required. Communication. The economic events are identified, measured and recorded in order that the pertinent information is generated and communicated in a certain form to management and other internal and external users. Organization. Organization refers to a business enterprise, whether for profit or not for profit motive. Depending upon the size of activities and level of business operation, it can be a sole proprietary concern, partnership firm, cooperative society, company, local authority, municipal corporation or any other association of persons. Interested users of information. Accounting is a means by which necessary financial information about business enterprise is communicated and is also called the language of business. Many users need financial information in order to make important decisions. These users can be divided into two broad categories, internal users and external users. Since the primary function of accounting is to provide useful information for decision-making, it is a means to an end, with the end being the decision that is helped by the availability of accounting information. Accounting as a source of information. Times provide information for making economic decisions. Times serve the users who rely on financial statements as their principal source of information. Times provide information useful for predicting and evaluating the amount, timing and uncertainty of potential cash flows. Times provide information for judging management's ability to utilize resources effectively in meeting goals. Times provide factual and interpretative information by disclosing underlying assumptions on matters subject to interpretation, evaluation, prediction, or estimation.